Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, with the Moose, John Mousseau, our CEO, Director of Fixed Income. And John was watching fixed income all week. Got some reports that gave bonds a little relief.
Yeah.
Followed up on last week, maybe traded in the same range, but seemed to be a real bid to the muni market anyway.
Yeah, I think what happened when you saw a PPI number that was higher than expected, but a revision to the month before, which actually took the 2-month total down a touch, and a CPI number that was a tenth less than they expected, that kind of gave a boost to the market. And other numbers this week, jobless claims, a touch higher. Philly Fed survey down from expectation. So all of it led into an economy that is slowing down slowly. And as I know you and Sean mentioned last week, bond yields at these levels, if they stay at these levels and even don't go down, it's a great time to be in bonds because, you're continuing to collect that 5% plus coupon in taxable and that 4% plus coupon in munis on the long end. And those anchors give a lot of heft to portfolios.
You bring up a couple great points there. First of all, you said one of the numbers from the week, it might have been payrolls or unemployment, was better than expected.
Right, that started the month out, right?
That's
correct.
Something that often people look at dead numbers and want to know why markets move on certain numbers. It's really expectations that probably don't get built into movements enough. And on the equity side, we like to call it positioning, right? Positioning. The earnings number matters less than the positioning ahead of the earnings number.
Exactly.
Right? So positioning, expectations, always very, very important. And as we spoke about with Sean last week, expectations when the 10-year was trading that 475, 480 range, there was some real fear. There was some expectation that we're going to press through 5.
Right.
Maybe run back to the October highs in interest rates, right?
Right.
So that seems to dissipate it a little bit. And that's been helpful on the equity market side. You've seen a real nice explosion in breadth. You see small caps get a little bid this month. We talked last month, small caps aren't going to rally till bonds start to come off in terms of rates.
Right. Yeah.
We got that. And you continue to get this push into industrials. And that makes it difficult for me to believe, even though you have some curve inversion, that there's a nasty recession around the corner. That once in a while you notice people on Bloomberg or one of the financial TV shows talking about. In terms of the industrials, I want to bring up a chart because we spoke about a few names back, a month ago. And I just want to give you an idea of how they've traded through year to date. This is from January 1st. You see that mid-cap industrial AIRR. Look at the performance there, up 20% year to date. Grid, which covers all the sectors that touch the electrical grid, and that includes some semi and some tech, by the way.
It's a big club.
A very solid year-to-date move. And then XLI, after bottoming in October and really coming off that number, keeping pace with the S&P. So in our tactical account, where we try to have broad bets and then focus bets, we have this industrial bet. We have some XLI, we have AIRR. I'd like to add some grid, on any kind of weakness. And when I say that, it's because that weekly momentum number that we discuss on this video from time to time, it's a little overbought right now. And one thing that you don't want to do is make a habit of chasing a market. So 9 times out of 10, it'll come back in here somewhere, and we'll look to ratchet up our exposure.
And the other part, you make a good point, is, you're heading into the summer season very soon. And as we know, they're fraught with storms, down power lines, et cetera, and, energy and electric power always go forefront in the news.
That's it. So we'll keep an eye on that area. We'll see if we can add at reasonable levels. Been pleased with the performance in the equity portfolios. They're trading with a nice diversified bid across styles, growth working, value working, mid-cap, head and head with large cap over the last 4 weeks, and even even a lazy bid in small caps.
Right. No. So
You have the Preakness this week,
yes,
John.
very excited. 2 weeks ago we gave you our Derby picks. Mine's Sierra Leone. Missed by a nose. If he had started out a little sooner on his trot home there, he might have done better. But it was a great race. He's not in the Preakness. I'm going with Catching Freedom, who's in the number 3 slot. He's being ridden by Flavien Prat, who actually won the Preakness 3 years ago on a horse called Rumbauer. So I kind of like him. At 6-1, he seems to be a decent value bet.
Yeah. What's funny is in the Derby, boy, that favorite fell flat on his face.
Oh, boy. Yeah.
And got a lead. The fractions were a little quick, but a good horse, nothing beyond what a really good horse shouldn't handle.
Exactly.
Didn't like to be looked in the eye.
Who do you like tomorrow?
I'm going to go back with that Lucas horse, Just Steel. He had a really tough trip, slammed out of the gate in the Derby. Right. And as I said, I'm just a D. Wayne fan. Yeah. So listen, that horse will be 18, 20 to 1. So
yeah, no, it's good. That'll be a better payoff. Catching Freedom won the Louisiana Derby, so I have that going for me, if nothing else.
Yeah, one thing about Just Steel, and something to keep in mind, 2 back in the Arkansas Derby, finished 4 lengths ahead of Mystic Dan, who won the Kentucky Derby.
There you go. So there's something for you right
there.
We'll
see what happens.
Yeah.
We always like to have a little fun around the big races. Enjoy the weekend. We'll see you next Friday.